Good evening and welcome to Options Center. It is 10 p.m. on 6/13/23. It is a Tuesday night. We had CPI today. That was a catalyst. We have a bunch more coming up tomorrow. PPI. We have FOMC minutes. Not minutes. We have the FOMC meeting at 2 p.m. So that's going to be another catalyst. So a lot of volatility happening here. We have options expiration happening at the end of this this week here as well. We already had the futures. So what does this mean? This video, we're going to talk about, we're going to go through multiple time frames and talk about from the top down and explain what we're looking at from the big picture all the way down to what we think might happen tomorrow. The story frame still stands. I don't talk about fundamentals often, but I want to kind of give you my thoughts. And my theory is there are multiple signs that a recession's coming. Whether you look at spreads, there's all these things that I don't usually show on my channel, but I'm a chartist by nature, so we read the charts and the charts come first. And I kind of have a theory behind it, and that's with the Fed. The Fed is what drives markets. So is the Fed printing money, or is the Fed taking out money, liquidating? You know what? They're pulling money out. They're raising rates. Rates need time to settle into economic data, so we haven't seen that. So there's always a certain point in the long-term time frame, especially when you're looking at monthly, weekly charts, where those tie in with fundamentals. That's where those mix in. I am a technical analyst, but bringing those things in together, whether you look at those things, it's all about the Fed. It's all about what they're doing. Are they draining money out? Or are they pumping money in? And they're certainly not pumping money in right now. So why is the market moving up? Well, with technicals, we're having breakouts. We're having higher highs and higher lows. So, really in the long term, we're neutral. We're not bullish. We're not bearish anymore. But in the shorter term, you have to be bullish. You have to be bullish. So if you're in the Discord, if you're in the Options Guy Discord, you're wondering like, hey, why do you keep going against the market? Trend is our friend. And I'm looking for a top. I am a top and bottom type trader. I have certain methods for my madness, but I don't recommend it. I don't recommend following those certain situations. It is very risky, and if your risk appetite doesn't follow that, then you're gonna lose some money. But when you do hit, you're gonna hit home runs. So so what we're gonna do is we're at the monthly time frame on SPX. And what we're going to explain here, we're going to try to tie in a little bit of fundamentals with this. And I'm not going to show it on screen, but I'll talk you through it. And with the Fed pumping in money, well, they're raising interest rates as price was going down. They started raising interest rates, and price is anticipating the pause and then the turn, perhaps pivot of the Fed to where they go back to lowering interest rates, and so we should go higher, right? Well, that fits a more bearish scenario where I think this is going to be a top here, and we go maybe an ABC down. That's what I've been looking for the whole time. We've gotten to that 618 golden retracement, and we've actually gone above it. But we have to close the month in the long-term time frame, and we'll look at all this on lower time frames, but we have to close above it on the monthly, weekly, those sort of things, above the 618 retracement in order to kind of really convince that we're going to keep going higher. So I'm going to give you a bullish and bearish scenario when we go down to the daily time frame. But right here, we have a wave 1, 2, 3, 4, 5 complete. But with this wave 4 complete down here, it's possible that we're looking at a new wave 1. This is all Elliott wave analysis. And this trend line goes way back to 2009. So this is a very valid trend of resistance. And we hit that resistance and rejected hard. So what says we can't go back up and retest it? Nothing. So that's the bullish scenario where we reject off it, we get another high, and then we have a bigger low. Okay, so if this is a wave 4, this is possibly a start of an ending diagonal where this is a wave 1, a wave 2, we're working on wave 3 to hit off, and we'll reject a wave 4 and hit one more time at wave 5, and that will be it. And then we start with a higher degree wave, well, recession in that case, but hold on one second. Correction. So right now we're either looking for an A, B, C correction on a higher degree or an ending diagonal. And I've done this a long time ago. I'll actually put those videos up before, and I've been going against the grain because I thought we were gonna have the turn already. So yes, I've been stopped out multiple times now, and that's okay. That's what we do. So let's move down on this. Let's go to the indicators. So we have the MACD. We're really at a battleground. You know what? I'm jumping ahead. Let me go back. Jumping ahead, and let's look at a little bit closer. Let's tighten up this. Get a little closer on this, on the monthly time frame. And I was talking about this area for so long, 11, 12, 13 months, whatever it was. And this also, the 20 simple moving average on the monthly time frame and the 8 trending moving average. We're above the trend, okay? We're also above that 20. The bulls have the ball. This is definitely gonna drag in a bunch of bulls. Now, in the back of my head, I'm saying, hey, we need to be bullish. But forward with my thesis, I'm saying there's no way that we're gonna go higher, right? That we're gonna make new highs. So I'm having this battle myself, and we're pushing off this range. So technically, we're bullish in this move. This monthly has to close. We're looking at this real tight monthly range. Well, we broke out from that range, and we haven't looked back since. Now, with that said, with the MACD, we are starting to get this bull cross momentum. You don't see any green bars in the histogram yet, so we haven't made that cross yet, but you see we're trying to make that cross. So the bulls are going to have to really close this monthly candle for us to get a green histogram next month for July. Also, we have a lot of room. We are bouncing off the 40-50 area, and if I pull back just a little bit on the RSI, you can look up the RSI. I do have some videos on MACD and support and resistance and things like that if you need a tutorial. But if you notice, ever since the Corona crash ended, 2009, this is the monthly chart. 2009, after the recession, we cannot close below this 50 line on the RSI, and the same thing with the MACD. We're not underneath that 0 line. Okay, so this is all bullish territory. Bull, 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 bull. Well, same thing. We're in bullish territory again. Couldn't break down. Are we going to make a lower high? I don't know. We have some room to go up. That could be what we're talking about. We're bouncing off the 50. We can make a lower high as we make new highs here, which would bring us, and that's why I had this drawn. I did that in the old videos, where that would be bearish divergence. Okay, we made a high, we don't have any divergence in the MACD, but if we make new highs here as a ending diagonal, meaning in 1, 2, and we start to make a wave 3, we're going to make a new high there, but we're not going to make a new high in the MACD or the RSI, and that could be represented by this downtrend here throughout the years. All right, so that's the bullish scenario that I have that's in play, is that this is an ending diagonal, and we're going to head up to these downtrend lines, and we're going to make a bearish divergence on the MACD finally. All right, I'm spending a lot of time in this higher time frame, but I really want to hash this out. On the weekly time frame, you'll notice that we had this downtrend, this channel, and we broke off from the channel. We're not looking back there. You see we have some obstacles still to come, but we got through most everything. We're getting through the looks like August highs. We got through all of these different higher highs, higher lows. Okay, it's really starting to push up. But here's what we're looking at. This 50% retracement on this weekly. If this is a wave 1, this is a real powerful wave 1 from the Corona crash, and we come back. This is real likely to be wave 2 because it's a 50% retracement. If you're in an ending diagonal, your retracements don't really come back that far very often. Don't come very far like a regular wave 2. If this is a regular 1, 2, we'd come back to this easily to this 62% retracement right here. That wasn't the case. We came back to the 50%, which is a little bit more shallow. That's typical. And now we're going to make a new high as a wave 3. Come back for another possible 50% retracement or maybe less, and then go as a 4 and then head up to 5. Okay, now in a bearish mode, I have a downtrend here, and that we might be coming near that resistance there. Also in the RSI, just drawing lines, we might be at resistance right now. So there's some things that could happen. It could go either way. This is a balanced situation where we had a pullback, and it could balance sideways. I mean, honestly, if this is a wave 4, we could go sideways, but that's not on my chart yet. We're looking at the bull bear, but not necessarily like a sideways triangle necessarily. Like a 3-wave move down, 3-wave move up, 3-wave move down, 3-wave. So that could go sideways for a long time if that were the case. But we will keep our, that would be the third alternate, okay? Let's go down to the daily. All right, daily trend is our friend. Have we been obeying this trend? Well, we saw ascending triangle. We have that with the turquoise, and we broke out from it. We definitely are having that breakout from there. Downtrend line, broke out, retested, heading up. There's a lot of different ways you can look at it. But now from the bearish point of view, this is just a big ascending triangle. Okay, and we're headed towards the top of it. And that top is around 4,400, which that would probably play as a bullish or bearish scenario. We should see a top a little bit around there. Tomorrow we might get a catalyst to where we finally break down, retest, and come back up. And the reason why I say that, I'll show you on the Elliott wave. But you see the trend is up right now. I drew another triangle here, even though I had a triangle to where we're breaking out before. I'm just trying to get the bearish grip on it while having a bullish bias. All right, because my thesis is bearish, but you know, price action is saying bullish at this point. Let's go to. We're going to do the Elliott wave count from the bear and then the bull side. So you have the bearish count And this is real. I have an ABC just to keep it simple, but really I'm looking at a WXY where this is a 5-3-5 zigzag, an ABC down, and then a 5-3-5 zigzag. Problem is, right now we have a little bit more to go to the upside. I am short, but I'm short for a wave 4. So if we dig in here just a little bit further, I'm looking at this this part. If it's WXY, for this to be 1, 2, 3, 4, 5 completed, and this to be a 1, 2, 1, 2, 3, 4, 5 for a 3. Probably check back to this 4,300 area, and then for a 4, if it's a 3-wave move, then we'll be looking for higher prices for the last wave, and then really start getting aggressive again. So I'm pretty aggressive right now in this short, but we'll be looking for more shorts, especially if we stick underneath the 4,300 area. We get underneath it, then that's the end. And if we can't break back above 4,300, then that's the end of that move. And there's certain ways you could count it to where it's even more bearish, but that's kind of the more conservative bearish, that we have a wave 4 coming and a 5 back up. Okay, and now let's look at the alt, because we look, honestly, we don't have any bearish divergence here in the daily. We burn through everything. We are overbought, or we're overbought. So we're in a condition to where we should get a pullback, and then that pullback should make a higher price high, but then on the RSI and the MACD, it should make a lower high. So if we go over to the alternate count that we have here, we're looking at, and I had this, if we go to the weekly, just so you can see this, in the older videos I had a couple arrows here, and I want to point out, if this is a wave 1 and we're pulled it for wave 2, I want to point at the A, B, and then the 5-wave move for C, and compare that to, you see the turquoise arrows, what we're doing right now, and that's the A, B, and now we have to work out an impulsive wave C for the wave 3. Now the wave 3 can't be the shortest, but with the long-term trend that we're in, I can imagine that this wave 1, it's so huge that the wave 3 is going to be smaller than 1, and then 5 is going to be smaller than 3. Okay, there's a 5-wave move, an impulsive move. Now, when you're in an ending diagonal, I just want to, for those who don't know, an ending diagonal, yes, you have your 5-wave move, 2, 3, 4, and 5, and the wave 3 can't be the smallest, but in an ending diagonal, the smaller degree of each of these, they're actually 1, 2, 3 wave moves for each of them. 1, 2, and 3. Each of the smaller fragments are only 3 waves rather than 5, which it's very typical for your impulse in a regular bull market. You have 5 waves in each of these waves. You have 5, 3, 5, 3, 5, and then that's a higher degree 1. And I don't want to go through all of this, but in an ending diagonal, you only have 3 waves in this 5-wave impulsive move. You have 3 waves up, 3 waves down, 3 waves up, 3 waves down, and 3 waves up. So just to make you aware, let me get rid of these. And one of my friends from out at Social, Stefan, this is a shout out. He said, "Hey, if there's a lot of people that try to follow here on with me and other technical analysts as well, and he says, slow it down. There's a lot of people that just don't know. You dig right into it. Usually I move really quick and I show this, the data, bam, 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 bam. And so I'm really trying to slow things down and really describe what's happening. So to get back to where we were, those turquoise arrows are showing the A, B. You see the sideways movement. There's a big consolidation. And then boom, blast off. Well, same thing here. The A, B have our sideways consolidation. And now I'm looking for, this is the alternate for me, even though we are in a bullish scenario. My thesis is bearish, and I have a 1, 2, 3, 4, 5 up for C, which should make a new high. And so I don't think we quite got that wave 1 yet. I think we have the 1, 2, 3, 4, and this is a triangle. And wave 5 is 1, 2, 1, 2, 3, 4, 5, and we should see a 4, 5 back up, and that should be a total of a 5-wave move. So this is in all, if you see this A, B, and then 1, 2, 3, 4, 5, that's a 3-wave move, because this is the first part of the wave, second part of the wave being this big correction here, and then the third should be the impulse part of it. So that's what I mean. 3-wave move up, 3-wave move down, and then 3-wave move up, and we should see another 3-wave move down and 3-wave move up before a much, much larger correction at that point, being the ending diagonal. Okay, that's the bullish scenario. Now, getting just a little bit closer and just paying attention to, okay, well, if this wave 1 ends pretty soon here with these catalysts happening and stuff like that, after this A, B, now we should see a 5-wave move up. Well, we need to say a wave 2. Well, the wave 2, you notice how these are very shallow. This is possibly an A, B all the way over here, but I have a 1, 2 as well, okay? But after that, you hardly even get past that 50-day moving average. So there's no reason why we should really get underneath this 50-day moving average that are all pointing up. All the moving averages are starting to curl up. And if we're bullish, even on these scenarios, even after wave 1 and 2, we shouldn't see much move after that. Okay, let's move this 50. This is a retracement tool. So let's just say today was the top, and we should retrace, but I doubt we'll even see like a 50% retracement. If we do, it's still valid. If this is a wave 1, it's not invalid until we get underneath. You can't cross underneath the bottom of wave 1. So really, the typical would be 50% to 60% on a wave 1 to 2. Now, why don't I have the 2 down here? Because if you notice, in the ending diagonal, just like this, you get to that wave 3, like the 2 to 3, nothing really pulls back very far, okay, until you get to wave 4, and that just tests the 100-day moving average. So that's where those come in. So if you're really bullish like that, we should see a test down to, if we start to pull them back now, 4,200 or so would be like the most, but really would be looking towards this 20-day moving average. You know, not very far. Yeah, that's 150 points, almost 200 points away. But in the big scheme of things, we shouldn't see back to 4,000 or so. But if we do, you still have to say, hey, we're above the 200-day moving average. If we're coming to test it again, and we're trying to go higher. So, you know, this isn't the only scenario for the bulls. There's super bullish scenarios where this is a wave 4, it's done, and this is now a wave 5 or even a wave 3 in a higher degree, to where this is a 1-2 1-2 setup, and you go much further. So there's a lot to go on here, but these are more likely situations to where either the bulls keep going and we're looking at stalling and continuing higher pretty soon here, or like I said, in the bearish scenario, which is my primary, along with my thesis and we've only moved up 25% from the top, which means we're in a bull market. That's what everybody's saying, bull market now. And but we're at this 62%. If we get back under the 62%, I'm taking much harder shorts and holding. If we hold under there, if we get back above 32 or the 4,300, then we're talking about stopping out again. So I'm willing to take those risks. I know what's going on out there, and again, if we stick above 4,300, then we should look to go to 45. Now, getting back to the the traditional technical analysis, we have the trend here. Like I said, we might test back to the 4,300 and then go hit that 4,400 area. And so you can play that too. We'll be looking at other stocks in order to hedge on those type of plays. Let's see what else. And this is just a big ascending triangle for me, and head lower after it breaks down from this. Okay, well, what about tomorrow? I know we talked a little bit about it. Let's go down to the 65-minute lower time frame. Okay, so we have that this is a wave 4, the triangle. So we have 1, 2, 3, 4 as a triangle, and we need 5 wave moves up. Okay, so this is a 1, 2, and then we have a 5 wave move for wave 3. We should pull back a little bit ways for wave 4, and then one more high is kind of what we're looking at. Even though we're short right now, we burned through some of these divergences already right here. So we don't even have a divergence on here yet, so which is very common when you're in a wave 3, that you head down to wave 4, and then wave 5 should be a bearish divergence. So we'll be looking for that divergence on the next high if we get that, and then go from there. Yeah. So I think that's where we're at, and the next video won't be so long. It'll actually be a little bit more. I do a lot of shorts, so I'm gonna put some daily shorts, and I probably won't update until I have something legit to talk about. So I'm just kind of reworking this. I want to be very educational while I'm doing these videos, so bear with me. And if you need to speed through things, whatever it takes to teach some people, that's where I think we're at. We're in a real neutral position. The third option from all this is that really we're in this big old triangle from the top to the bottom here, the recent bottom, and we're just going to go sideways for, gosh, I remember people saying that online for on like Twitter and stuff like that we have a sideways move for a good couple years. And that makes sense if you're looking at consolidation from this huge moves that we've had for years and years and years. We have to move sideways for a while in order to move back up. I don't know. We'll see. We play it day by day. All right. Thanks for joining us here at Option Center. Have a wonderful night. We'll talk to you soon.